Good day. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 12th of August, 2020, and the time right now just getting on to 6 p.m. Central Time. Well, as you can see, you're down another $21 tonight in the gold, 40 cents in the silver. This is going to be the norm for a while. Why? A market that drops the way that you did yesterday and that gets a bounce today, they like to work back and forth to see where the action is going to find a low point. That is the search that I think is going on in that market. You had a good rally today in the euro that held, and the dollar was lower, but moderately so. They hit key areas and ran into resistance. In the stock market, it's been a heck of a run. You did get up challenging the highs in the S&P, but haven't been able to get a close over that number. I'll be talking about that in my financial market video. The energy markets got a nice bid. There is an OPEC meeting. I think it's on Tuesday, so we'll want to see what they are doing. And in the grain markets, well, it's more of the same. The market's trying to get bounces here. Got to be a bit cautious with all that is going on. Just a difficult trade in some of these markets right now. So let's go to them and see what they're offering. When we look at a weekly chart of just closing prices in gold, you got up as high as 2010 from the recent low of 1676.20 in June. That was a correction low, and we've rallied roughly $450 or so in that market, $440, and coming down for a correction. You're already about, what, a $70 correction in round terms? When you look at the market right here, you can see how this break has really taken the wind out of those that were bullish. And do you have a pattern yet to trade off of? Not really on the daily charts. You have a higher high and a lower low. The market is fighting a battle, they couldn't even make it today back to the 18-day average. If it lets go from here, what are the next targets? Well, one of them would be 1787.20, the 100-day moving average of closes, but more probable support is right here, the lower Bollinger Band at 1863.70. Now from there, that's another from here with a $20 break. That's almost another, what would that be, putting in there over $60 more from that. Doesn't mean it has to go there. Doesn't mean that the market won't over time. The market will hang in and the Bollinger Band will climb towards prices if they stay like this. But I'm giving you the picture. No trend, bias down, lower Bollinger Band potential support with resistance back at 1970.50, the 18-day average of closes. The differential between gold and silver, you can see silver is still losing to gold. If silver were gaining, these numbers would be falling. The higher the numbers go means silver is losing to the gold market. And on a weekly chart, and I left this one up for the week because I showed the closing prices on gold. And by the way, on the gold, I did a full report today, and I'll talk about it right at the end of this, on the monthly, the weekly, and the daily chart patterns. I then went in and gave you the 30, the 15, and the 5-year seasonals as to what they look like from this year, from right now in this year, going forward, along with price counts longer term to give you an idea where the gold might go. Because I do think this is a correction move. I don't think it's the top move. So just want you to be aware of that. And I'll show you how to get to it in a moment here. You can see that the market came back within those Bollinger Bands, and you had been out of them 3 weeks in a row. So, pulling back in, there's nothing wrong with. And unlike the gold market, this market's got better footing than gold. It's trying to really hold on at this 18-day average of closes. The trend is still up unless you take out this low back here. Momentum is broken enough in this market where it's no longer even close to being overbought. So I expect that with the wild swings we're going to get that eventually coming out of the market. The volatility, I'm hoping, will dry up close to that 18-day average where normal trading will set back in. In the copper market today, just give you an idea. Look at this rally and look where the market rallied to. 290 and a quarter. What's the 18-day average of closes? 290. Where did the market stop? So I can make an argument now that these arrows that I had yesterday, we remove. And we put up arrows, one here, and the first close over the 289.80 area. Well, I think we have to get friendly in that zone. So we'll take a look at the market there. Let's take a look at the platinum market. The platinum market has a higher high pattern and a lower low from back here. This hasn't done that. Again, we're very close to all the 18-day average of closes. We've had a big break. Somewhere along the line here, this market's going to consolidate a bit. You could be in that process right now. In the palladium market, same thing. You made a run back up this is today's action. You got to 2210, just missed the 2217 area, but you have a higher high, lower low, and you've got pretty formidable support at 2082 to 2084, the 100-day average in the lower Bollinger Band. I'm not bullish any of these markets. I'm friendly copper, the most of them all, but you've got to wait and see what they're going to do. Then we get to the dollar index. So the dollar index has been churning and trying to get higher. It had lost its bearish embedded reading not here, the day after this. I wanted to show you both numbers under 80 on Monday. Often when that occurs, I'm looking for price in the 18-day average to make their run at each other. I think they did a pretty good job of it today. You got to 93.89.5, taking out the 93.79.5, and you're down right here. All that happened is you hit the upside resistance point. What did the market do in these readings? You're not yet out of the oversold condition. So no, I can see the reaction has happened, but the market hasn't said it's a big change of trend either. It's a correction in a market that had got stretched out to the downside, and you get the opposite if you look at the euro currency, and I'll show that in the financial wrap-up. As I said, I did the metal report, and I really focused in on monthly charts because I know a lot of people like the long-term analysis. And sometimes for that, you'll find those small contracts are the best way to build positions over time. I went into the seasonals, the 30, the 15, the 5. I went into price counts, another proprietary target we have. It's a target tool, it gives you an idea, and it's just in the gold market. I didn't step away from that. So how do you get it? Well, you can either call my staff to help you, but you can go right online to see it. Go to www.iraepstein.com, go to the word research at the top, click on it, and you'll see everything drop down there, and you can view it right from that area. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.